Hi, everybody. Welcome back. My name is Craig Kern. I'm the founder and lead educator here at True Alpha Trading. In our previous session, which is titled Getting Started Part 4, I took you inside the Thinkorswim trading platform and showed you the general layout of the platform and how to navigate it by showing you some of the ways you can customize it. In this session and our next session, I'm going to give you an overview of the stock market. And I'm going to do this by showing you a simple drill down analysis that I believe will help you not only see how the stock market is organized, but this is also a great way to break down the market and analyze it. Now, breaking things down and analyzing things is critically important because it's one of the first steps towards forming an opinion about what's taking place in the market. And that's an essential step forward because an opinion or expectation is what exists at the core of any trade or investment decision. You can think of the trade or investment decision as a byproduct or expression, or it should be a byproduct or expression of your opinion or expectation in the market. Now, keep in mind as I show you this that your analysis and opinions don't have to be ultra sophisticated. This can be as simple or complex as you want to make it. But what's important is that you can articulate your opinion or expectation. Now, what do I mean by that? I mean that once you've gone through whatever level of analysis you're comfortable with to ultimately arrive at something you want to trade, you should have an opinion or expectation you're then building an investment or trading position around. Your opinion might be something like, I believe Amazon is going higher, so I want to take a bullish or long position inside of Amazon. Well, if that's your expectation, what you need to know is that there are multiple ways you can get long Amazon. Multiple ways you can get long Amazon beyond simply buying shares of the company's stock. Okay. Or maybe you're on the opposite side of that trade, right? Maybe your opinion or expectation is, well, I believe Amazon is going lower. So I want to take a bearish or short position inside of Amazon. Well, the same thing is true. Okay. There are multiple ways you can get short Amazon besides short selling the company's stock. And here's another thing that's really cool about adding derivatives to your tool belt. Let's say you want to trade Amazon, but after some analysis, you ultimately arrive at the opinion or expectation of, you know what? I have no clue where the price of the company's stock is going. Okay. Well, believe it or not, that is a valid opinion or expectation you can actually build a trade or investment position around. In all honesty, I trade or invest from this opinion most of the time because I don't believe that anybody can reliably or sustainably pick stocks. Reliably or sustainably pick stocks or time the market. So I prefer positions that are dynamic and that offer more ways to win than one. Now, I say all this because, again, once you've formulated your opinion or expectation, you can then formulate or pick the best products and strategy to express that opinion in the form of a trade or investment. Okay, so this session and the next one are going to be geared more toward helping you on the side of formulating opinions and analyzing the market. And in our next sessions, we will start breaking down some additional terms and concepts and specific products that you can begin using to take action and place trades and investment decisions around your opinions. Okay, now, when I was a kid, I liked building things. I loved Tinker toys. I loved Lincoln Logs, and I was a Lego kid. And I like taking things apart and putting them back together. And as I've gotten older, I've also realized that I still learn a lot by taking things apart and putting them back together. I remember when I was a kid, my grandmother bought me and my brother a gym bag full of the little classic GI Joes from a garage sale, right? And these were the kind that today would probably be worth some money. And they weren't designed to do this, but I would take 2 or 3 different GI Joes, and I'd take them apart by taking the little screw out of the back and disconnecting the rubber band that was on the inside. And then I would take only the coolest parts of 2 or 3 guys and put one of them back together to make the ultimate GI Joe. And I remember as a kid just feeling super empowered when I figured out how to do that. I thought, there's no way any other kid out there has as cool of GI Joes as mine. Mine are one of a kind, customized just the way I like them. Okay, well, that's just an analogy or a metaphor, but that's the same kind of thing that I want to start teaching you here in the next handful of sessions. I want to show you how you can break down the market so that you can start analyzing it for yourself and forming your own opinions about what's going on in the market. Then I want to teach you to express your opinions through trade or investment decisions and strategies. Okay, so that's where we're headed in these next handful of sessions. Now, I want to say the same thing here that I said about all the features and tools inside of the Tasty Trade and Thinkorswim trading platforms. And that is that you're most likely not going to learn everything there is to learn about trading and investing. And that's okay. My personal belief is that most people will never learn everything that there is to know about the market and the various products that you can trade or invest in inside of the market. Okay. Again, most people, I believe, will focus on the areas that interest them the most and what works kind of best for them, and then leave a lot of the rest of the stuff that you can trade or invest in alone. And what I just want to tell you is that that's okay. So don't be overwhelmed by all that's available to you in here. Carve out what interests you or seems beneficial to you, and then when you're ready, you can always add to that. So I'm not here to tell you what you should or shouldn't be interested in. I want to better equip you to determine that for yourself. Now, don't get me wrong, I'll show you what I believe are some great strategies, but I want you to be able to see why they are great strategies. So you can decide if they're good for you and prudently decide how much you might want to allocate to those strategies. Again, no one should ever tell you, I won't tell you how much you should allocate to any position. You should be able to determine that for yourself. And again, that's what I'm going to teach you. Okay. So, what I want to do is start with a question that most of us have asked ourselves at some point, or maybe it's a question that you're now beginning to ask yourself. And that question really is a simple question, right? It's, what the heck is the stock market? Well, I want to begin answering that question by asking another question. And that is, what is any market? What is any market, or what is a marketplace? I think some of the images that come to mind when we think about the stock market are images of Wall Street, or images from inside the New York Stock Exchange, or the flashing ticker symbols on billboards or computer screens, or charts with red and green candlesticks. And whatever those images may be, I remember for me, a lot of these images seem so sophisticated and elite and complex, right? Images that can be a little intimidating when you're new to all this stuff. So I want you to think about some better images, what I believe are better images, that I think most of us are less intimidated by and understand. Like maybe images of markets in less developed countries, or farmers markets, or flea markets, or supermarkets and grocery stores, or maybe even fish markets. I've never been to a fish market, but I'm sure that would work here too. Or how about shopping malls and strip centers, or online marketplaces. I believe these are better images. In our world today, we have many types of physical marketplaces and online marketplaces. And although each of these marketplaces are unique in their own ways, they're also very similar at their core. All of these markets are similar in the sense that they are locations where buyers and sellers come together to exchange goods or services for cash. And back in the day, all these type of markets or similar markets might have been to barter for other goods and services. But today, man, it's all about the money, right? So, having said all this, just keep in mind that the stock market is unique in lots of ways, but it's also very similar to these other markets at its core. It's unique in the sense that it's mostly now a digital or online marketplace where buyers and sellers can come together to exchange shares of publicly traded stocks, bonds, and or commodities. But don't let it intimidate you. Don't let it intimidate you because at its core, it's just another market where buyers and sellers come together to exchange products for cash. Now, I want to point out here that I boil the stock market down to a marketplace where you can mainly trade those core products, those products being shares of stock, bonds, and commodities. But keep in mind that you can also trade currencies, digital assets, and I guess lots of other stuff. But I'm going to highlight stocks, bonds, and commodities because they're the main products that, well, they're the main products that I trade. But I highlight those because a lot of everything else that is available to you in this marketplace are either outright shares of these products or derivatives of these products. And by derivatives, I just mean these same fundamental products just packaged up in different ways. Okay. So you can think of stocks, bonds, and commodities as the fundamental building blocks of the stock market. And a large portion of everything else in here, you can think of those as derivatives of these fundamental building blocks. So that includes lots of your mutual funds or ETFs, which stands for exchange traded funds, option contracts, futures contracts, and options on futures. Okay, most of these products are just derivatives of those same fundamental products. And this is important to highlight because as those fundamental building blocks or products are exchanged, meaning they're bought or sold, right, at different prices every single day, as the prices of those fundamental building blocks are traded or exchanged, they drive change in the prices of their derivatives. Okay, so having an understanding of these core products and how they're related is extremely important. And being able to drill down from a derivative to the fundamental products that drive it, again, is an important concept and methodology to practice in order to sharpen your understanding of the market and formulate trading or investment decisions. So, where I want to start is I want to take a 14,000 foot view at the market.